Welcome back to another video, guys. Today I want to share how I split my investments within my NISA between Japan and global markets. I just want to share the thought process behind this kind of breakdown. There are people who are interested in investing in Japan. They might have heard about NISA and then get stuck when it is time to actually choose how to allocate their money. The point is not that you should copy this exact split. The point is to show how a NISA portfolio can be built with different roles inside of it. And even if you're not using NISA, you can also use this approach elsewhere. Let's start off with my portfolio breakdown. So my portfolio is about 56% US stocks, 42% investment trust, 2% domestic stocks, and these are Japanese stocks. The US stock side is the largest part, and it is where I want most of the fast growth exposure to come from. It is also where I'm more flexible because I can add individual stocks that I'm interested in to see how they perform. But before I do that, I always do my due diligence and I ensure that whatever I'm putting into those stocks, I'm willing to lose if anything goes south. My US stocks positions gives access to some global businesses listed in the US market. And I say global businesses because US stocks does not always mean the companies only make money in the US, nor are they all American companies. Many of these companies earn money from different countries and have customers around the world. For now, I'm comfortable having it this big because it gives me growth potential and global reach. The investment trust side is the second largest part, as you can see. This part gives the portfolio a bit more structure. It is where I can hold all the beautiful funds that cover different areas without needing to pick like every single company myself. Sometimes we think that a portfolio needs to be full of individual stocks to be interesting. It really does not. A simple fund can do a lot of work quietly in the background. This is one of the lessons from this kind of allocation. Individual stocks can be exciting, don't get me wrong, but funds can help keep a portfolio from becoming too dependent on a few companies. My investment trust is where I automate most of my investments, and I automate them daily and monthly. My Japanese stocks hold around 2%. That may sound low for someone living in Japan, but there is a reason for that. Japanese stocks can require a large upfront amount because a stock priced at 3,000 yen per share would normally require about 300,000 yen for one standard unit before costs. That is why I have most Japanese index funds, and I also like using smaller entry tools for most of my Japanese stocks. I use mini Kabu and Pitta Kabu. You really do not always need to jump straight into a full 100 share unit. You can build gradually. In my securities account, I like to leave a bit of cash there to be invested. The amount I have currently is around 2%, but I think it is worth mentioning because not every dollar or yen has to be invested immediately. Some may be placed in like money fund or a foreign currency denominated MMF while I decide where I want it to go next. I started using Rakuten Money Fund and foreign currency denominated MMFs this year. They are basically places to park money while trying to earn a little yield. Rakuten Money Fund is more like a yen-based place to temporarily put the cash, and the foreign currency MMFs are similar, but they are in foreign currencies. So they may earn interest in that currency while also carrying the exchange rate risks, of course. you can earn a few yen or dollars while the cash waits. I think doing that also makes investing a lot more fun. Investing is boring. It is. The experts were right. It is boring AF. I really hope you learned something from this video. I really do. And don't give up on your investing. Please start if you've not started, and if you've started, please continue.